All right. Welcome. This is the nightly strategy podcast for October 30th. We're looking at the swing trade patterns now. These are all from Ken H. And so I'm grateful to him, as usual, for doing the heavy lifting. If you want your trades coached, then post your charts. Here's U.S. Steel. And so this is the day, this is trade one, and this was him setting up trade two. He had reframed. What he didn't know was that there was going to be a 12% gap. He traded this one in the usual way. We just got done with the Kata 2. Could have been taken here. He waited to see the breakout above the Z2 line. So he takes this entry and puts a stop down here at the bottom of the dragon. He's using hourly charts here. So this is an example of core and turbo. This is perfectly suited for the daily chart because that's an SSC, and we're looking to get back to here and probably to here. So an entry there as that nice move and a second entry move right up in there. He gets his first entry here. It rolls over and then starts failing sharply. So he just takes it at the spine of the dragon and cashes that much of a win against this much of a risk. So that's about 1.5 R. It sells off, finds support, PSAR flips. Now, if it hadn't gapped up to here, he would have loved to have entered right there. But he couldn't because it gapped to here. So he buys this here. It gets this high during the day, and then he says, you know what, on a Friday, I'm done. No sense holding that overnight. So that's a scratch. So that's about 1.5 and a 0. Perfectly played. No overnight risk. And what he's probably going to do is take a little risk box around that and then play this or play that. If it breaks out of this range, that's this trade. All right, here's QS. Now, this one's a challenge. This one is extremely volatile. Look at the size of these, of those moves. Those daily bars are large. But what it lets him do on the 30-minute with his turbo is, you'll notice the Z3 pinch. It's not a super pinch because the RL270 is not up inside here. But if the RL270 had been up in there, then that would have been a super pinch. Otherwise, it's just a Z3 pinch. And he notices the harsh winter. Sells off, holds, PSAR flips, might have bought it right here, elected to wait for it to cross the Bollinger Band mean, uses this nice wrist box. It runs up, gets all the way to the Z3, then starts to roll over. I might have said, maybe that's okay, but I don't mind the sniper exit there, and he cashes this winning trade against that much risk. That exit protects him against this sell-off, and it comes down and holds support just slightly higher than it held support last time. He gets the PSAR flip. He buys it right in the elbow of the dragon, right where that thing rolls over. Notice he has improved his entry. He gets it here. Instead of this last time he was slow to get in, he gave back. That was the inefficiency. This time he gets it right at the RLXD, moves in his favor, comes back, holds support, gaps up in his favor, makes an explosive run up to the Z3 lines, and then starts to roll over. He takes the sniper exit and cashes this win against that risk. So that's his risk box, and his win box is probably 1, 2, 3, probably 4R, and gave back. And now his question was, he exited the entire position as it had started retracing. He didn't want to re-enter going into the weekend. Should he have kept the piece in play? No. If you ask the question, no. Time, will, pattern, money. If this thing's going to work, it's going to continue to go. Like if it gets above 29, why don't you just wait and see it get above 29? Because that's already up in here. And you can afford to wait for that. If it breaks above 29, it's going to get to 30, 31. And if it gets above that, this thing is long gone to the upside. So why would I don't want to hold that risk over the weekend. Look at how many gaps this thing has had already. I don't want to eat that. Just trade that intraday like you're doing on hourly charts. What are you afraid of missing? One of the moves? Okay. Give that to the gods. All right. ETHE. Swing low. Higher low. Caught a 2 entry. Higher low. Another caught a 2 entry. Here's the peak of the RL30. Emerging dragon entry. On this one, he noticed the low, higher low, so he frames the trade. There was a gap, so the soonest he can get it is here. It moves through, holds. He moves his stop up in here, but there's an adverse gap, and it gaps down to here, so he instantly exits like he should. He takes a fractional loss, frames this as a trade. He's ready to go long or short. It gaps up again, and now it's in his favor, and now he's moved his stop to here. So he's locked this much gain in, pending what's this thing going to do on a gap? I don't know. That's just the nature of ETHE. Now, if you're trading the crypto itself directly, you can make decisions inside of that space because it's trading continuously. But when you're trading ETHE, the trust from Grayscale. Richard asks, what else do we use to monitor price movements? Nothing else. We're tracking these charts and making these trades on the basis of the charts that you see. Don't need level 2. Simpler is better. Hey, Richard, may I ask, have you taken the foundations course or the hybrid course or the day trading course? Or are you just new here and observing? Okay, that's what I thought. All right, next up is ICLN. So this is clean energy. This one is a nice pair trade to compare it with PBW, which is the clean energy ETF. And this thing has been locked in this daily range consistently and just recently started breaking out of that and is now breaking out again. So this pinch box on the 30-minute chart is this one. And he framed that one to be able to enter here because he noticed the low and the higher low. So he was ready to enter here, but instead there was this gap. So he gets it after the gap open, using this as the risk box. Moves up in his favor. I would have been tempted to just take that one like right here, the horns of the dragon, but he holds. Awesome. Now you get a Kata 2 possible reentry there. It's at least a consideration or an indication this thing is working. And it holds here. And now he's ready to add an additional position there. So that's in good shape. And he's put his stop right underneath that little shelf. So he's locked in that move. He's locked in this gain box already. And he's ready to add another position here. So in good shape. Now, what makes this important is that this move has now eclipsed all of this previous sideways action. And now this is the harsh winter that caused all of this in the first place. So none of these levels are really resistance levels. Those were all supports that collapsed. So there's nothing, there's no price levels in here that are going to cause this thing to just naturally stall. So you can actually just wait and see how far up this stack it goes before it starts failing. Does it go up this far and start to fail, that far and start to fail? So that can now be money management. You should be using money management and R stops, counting your R multiples, as opposed to worrying too much about previous support and resistance. Tesla, noticing the parabolic move here. Notice all of the rising lows. Each one of those rising lows allowed for, as we've noticed, Kata 2 entries when support held and the breakouts occurred. Here's a Z3 pinch, or here's a Z3 breakout entry here. And now it's in the I almost said catastrophic, and kind of it is. So here was his box. It gapped. So he gets the entry. It runs all the way up. He waits for the, I don't blame him there. He waits for the, he gave it as much room as he could. Of course, that bottom ticks. He gets the re-entry here off of this wrist box. It holds, it holds, it holds, and now it's at 11. So he's got that move and he's locked in this much gain. So that's the gain that he's locked in. And knowing him, he's probably ready to add another position if it continues to march. He's giving it this much wiggle room. Nice work. All right, team is Atlassian Corporation. Support, 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 and going. It's well beyond the Z3 levels already. He had framed the trade. There was too much happening here to be able to chase, but it held support here. So he decides to draw his risk box like that. And the thing is working 1 and 2. It's starting that next leg up. And he moved his stop from here to there to lock in the gains. That's the risk, or that's the reward box that he's locked in. And knowing Ken, he's probably ready to add a second position here. Our last one for tonight is this is Merck. Support, higher support. So what would we call an entry right here? Out of 2. Yep. So this box that he's framed here on the daily, when you come and look at the hourly, that box looks like this one. This Kata 2 entry right here at a score of about 80-50 is this entry here. That's about where that entry would occur. And so if you had taken that entry over here, if you'd taken that entry, you'd have been long from right about here. And you can see that you could have actually improved on that by getting this entry here at about 78, call it 79. And then you might have added here or here or here. Now, the trade that he got was this one. He framed it tightly here. It reversed against him, so he quite properly took the exit. What he did not do was he did not reframe it, whereas his re-entry would have been here about 83 with about a dollar risk, and then we would have this one at +5 compared to a dollar risk. That'd be about $5. So after exiting, immediately reframe. That's one that got away, no problem. Can't catch them all, Pokemon. All right, that's everything we got for tonight. We'll get this published and posted. I will break out the Foundations Q&A for the Foundations course people, and I will post these in the usual spot. Thank you very much for your kind attention, and we shall see you tomorrow for the day trade frames, looking at the week ahead. So thanks again to Ken H. for his courtesy and sharing his trades with us. That's how you get better, guys. Take good care.